Look at the economic growth drivers for China, I always like to also look at where the indices have lended themselves in terms of the construction of the index and that change over a course of time. A lot of what we experience in terms of the underlying growth drivers and the engines of growth in China has actually been well reflected in the equity markets. So if I just took a look at the top holdings for the MSCI China, maybe 20 years ago, it would be in your cyclicals area, your oil and gas companies, your commodity companies, your construction companies, because at that point in time, that was certainly what was driving growth in China. 10 years down the road in 2014, 2015, you find a lot of Chinese financials, Chinese banks, Chinese insurance companies, Chinese telecom companies. These were the sources of growth at that point in time. Fast forward to today, the sources of growth are again very different. If I just look at the MSCI top constituents, for example, you'd find that a lot of them are more internet related types of companies. So in the e-commerce space, in music streaming, in food delivery. We also have, EV car companies being represented on the index. So I think all that shows is that China has really gone through an evolution of what was driving the economy and what has been actually contributing to just overall market performance. The clear sign is that the evolution from a more fixed asset leaning type of growth has actually occurred. It's now growing in a more digitized and a more modern way. I also wanted to point out that, with all this change in growth drivers in China, one thing that is clear from this chart is that China has actually relied quite minimally on exports to grow. So net exports as a contribution to overall GDP has actually been quite minimal. This is not to say that China will be completely insulated from everything that we've been hearing about on the trade tariff front, but that there are other more secularly growing and more domestically focused areas of growth in China. And as we move forward to the next slide, I think these images really just capture perhaps what the next 10 or maybe next 20 years of growth drivers and growth engines would look like for China. So increasingly, we're hearing about just efforts in the humanoid and the robotic space in advanced automation. Certainly, as I talked about, EV cars are already a part of the index. EV car penetration is high at around 50%, but we feel that there's still room for that to continue to increase. Biotechnology, for example, a lot of advances happening in the biologic space, in the devices space, as we speak. And in AI, as we've sort of heard about the DeepSeek moment at the start of this year, China has also some more credible developments also happening on the AI front. So as these types of more advanced industries and new economies continue to grow in China, we do feel that the underlying growth drivers will also skew towards more and more, increasingly more and more of the new economy mix.